Welcome to Edison TV. I am Neil Shah, market strategist at Edison. I am delighted to be joined by Craig Marshall, head of investor relations at BP. Craig, first question. You had a big strategy update earlier this year. How's that been perceived by the market? And with a new chairman in role, can we anticipate any further changes in strategy?
Super. Thanks, Neil. It's a pleasure to meet you. Thank you for the opportunity to speak to Edison TV. Yes, this year important for BP. We laid out our new strategy in February 2025. I think the focus very much has moved very importantly to delivery of that strategy, and importantly also the opportunity where we can to accelerate the strategy and the delivery of that. It was an extensive update, in particular around areas of focus, where we want to operate, where we want to invest. Maybe on investment, I think importantly, because that was a key change. What you actually saw was BP, through that disciplined approach, reducing its capital investment through applying discipline, focus on achieving the returns we need. We've actually reallocated investment within our financial framework, investing more now, up 20% into oil and gas, but actually reducing our investment into transition by around 70%. That's not because we don't believe in transition. I think importantly, energy transition will happen. It is moving, but I think we're being a lot more disciplined about where we want to invest, how we want to invest, and what we call the capital light approach. And you've seen some of the different models in transition that we've been investing in. Equally, I think importantly, in our core wheelhouse of oil and gas, we've got great options. We've got great optionality there in terms of the areas that we can invest in. And I'm sure we'll talk about that further. So a big change there. Importantly, also, what we said alongside capital investment is we see real opportunity in the company to drive further cost reductions, but also further efficiency across the business. We doubled our cost targets. We now have a structural cost reduction target of $4 to $5 billion across the company. Again, making good progress on that, already 9 months year to date this year. And then lastly, we laid out a divestment program, which is about high grading our portfolio, making sure that we're investing in the areas that we think are the right areas to maximize returns. And for areas which will struggle to compete for capital, seeking to crystallize value for shareholders there. So there's a very important divestment program. But what I would say is around those divestments, it's not about divesting for the sake of it. Clearly, value is a key driver. But what we said importantly is we want to allocate some of those proceeds to strengthening our balance sheet. So that is a key focus there around that. When you step back from the strategy, there was also a very important principle that we wanted to try and simplify our proposition to the market. So a lot of what I've said has been crystallized into 4 key targets. Number 1, to reduce net debt. Number 2, to drive those further cost efficiencies. And ultimately, that's showing up in a growth in free cash flow. So 20% compound annual growth rate in free cash flow over the next 3 years. And also growing returns to greater than 16%. So that is a short summary. But I think the real key thing is, and we'll talk about it, I hope, is the progress and the momentum we have across the business. Secondly, on investors, sentiment has been strong. I think they've received that change in strategy well. We've also met with many of our investors, around 80% of our institutional shareholder base. We continue to have a very active engagement, listening very carefully to our investors, but broadly well received. It's all about delivery now, and that's what we've been focused on. And then lastly, I think on our new chairman, Albert Manifold, came into role on the 1st of October, has been working extensively across the business, in particular with the executive and with the board. And we've had some new board members join alongside Albert in the recent months as well. Big focus on, and we've talked to the market about a portfolio review, which we're driving forward just now, and we'll update the market in due course. That portfolio review is about, again, looking at where is the right investment to place in the business to maximize cash flow and returns and to ultimately grow shareholder value. So we're going through that process with Albert and the board and the executive just now. And then I think secondly, a big area of focus is on costs. I think we have a very strong target out there. But what we're looking to do is there more opportunity to drive more efficiency? Can we get after it faster? And what do we need to do to make sure we drive that efficiency down to the bottom line? So I think it's an ongoing process. You asked about an update. I don't think there'll be a big reveal. Why do I say that? The strategy is right. Importantly, we're heading in the right direction. We're making really good progress across the business in driving that forward. And I think the idea that we see is we'll just continue to make sure we're updating the market progressively on the next steps. So that's probably a quick summary.
Okay, great. So I do want to talk about the upstream business. You've had some sort of key milestones over the course of this year on the upstream business, including some significant discoveries in Brazil. Could you provide us an update on the upstream business?
I think we feel really proud, actually, of the progress we've made across the upstream this year. We've got a great business, a great set of assets. We've got great capability and a very, very energized and driven team. And I think we have made good progress. It all starts with safety.
Yeah.
Safety, we call it inside BP our number one priority. What we call internally our tier 1 and tier 2 metrics, they are trending down. They have a long-standing history, and we've been putting a lot of effort into that space to make sure that we're driving continuous focus on safety. We do so through what we call a very rigorous operating management system. So it starts with safety. Then I think the second thing is run your kit well. We always talk about keep the hydrocarbons in the pipeline, keep people safe.
Yeah.
And I think on running the kit well, we've had really impressive operational performance this year. In the upstream, our plant reliability has been running at over 96% through the 9 months year to date. Great performance. So when you run the kit well, it's available. You can maximize what you're getting from it. So credit to the team for that performance. And then I think outside of running the kit well, we're making real progress strategically. So we've started up 6 major projects this year. And that's 6 of the 10 that we told the market we would update over the next 3 years through the end of 27. And 4 of those are ahead of schedule. So the team's doing a great job of getting the future online. I think also as we think about the future, we've taken 5 final investment decisions. Importantly, in a real core area for us called the Gulf of America, we've taken FID on our Tiber Guadalupe development there. So that's a big area of growth. That'll become our 7th operated hub in the Gulf of America. And then you've talked about Brazil and Bumerangue, but maybe before I go there, we've actually had 12 exploration discoveries this year, which is, frankly, I use the word carefully, but almost unprecedented. If you're an explorer, a 1 in 3 success rate is pretty good. We're not far off 1 in 1 this year. Wow. They've had phenomenal performance this year. So really proud of that. The highlight and what's attracted a lot of attention inevitably is Bumerangue in Brazil. So this is a find in the Brazilian offshore in the pre-salt. We own that position 100%, which is a huge position to be in terms of the value, not only today and in the future, but the optionality it creates as we think about possible opportunities to develop it. I'll come back to that in a minute. But what we found there, rather excitingly, is we think is the most significant discovery in probably 25 years of BP history. We've always had a big focus on exploration, but this is exciting. So what we're also doing is being very thoughtful about how we actually work through this, given the scale and size of it. To give you a sense of that, the aerial extent, if you think a 2D looking down on the field, over 300 square kilometers.
Okay.
So huge in terms of aerial extent. But then in terms of depth, to get a sense of that reservoir, we just updated the market and said that hydrocarbon column we think is about 1,000 meters, a kilometre in height. So over 300 square kilometres, a kilometre in height. And really importantly, contains what we've found now is around 100-metre oil column and a 900-metre liquids-rich gas condensate column. So the fact that it's hydrocarbon bearing across that column is really important. That's revenue. And what we'll do now is we'll continue to look at the opportunity to further develop and understand the next steps. So we own it 100%, hydrocarbon bearing across the 1,000-metre column, huge area to think about. Next steps, we'll come back to the market, I think, in due course and update them on what we call the gas-oil ratio. We'll update on the API or the density of the fluids there. Really importantly, I think the volumes in place we expect from that sort of 2D, 3D model I just described. And the team are also in parallel working up potentially early production schemes. And then we'll look to get from exploration now into appraising the field. And what that means is drilling, doing what's called a drill stem test. So we'll look to see what flow rates look like, but then the appraisal plan. So how do we actually drill in and sort of appraise and get a better sense of the recoverable resources from it? But by any measure, I think this is a significant discovery for BP. We've got a sense now around how we can potentially develop it, including the CO2, which is a product that exists there, but we feel confident about managing that. And we'll come back to the market on our plans now through 2026. Second half's probably really important, bringing a rig in and then looking to see what comes next. So exciting for the company. But really, if you step back, it's one of what has been 12 discoveries this year. And I would probably call out 3 wells we also discovered in Namibia, which are another exciting set of opportunities we have, in particular Volans through our Azul joint venture there and Capricornus as well that we've got. So we've got a lot of optionality. We're building out the future. And I think that's really quite distinctive for BP.
Okay. Let's move from upstream and now go down to the downstream business. It was a key part of the strategy update. Could you give us an update on the progress made year to date?
Yeah, and some of your clients maybe won't have had a chance to have a look at our 3Q results, but what we did in 3Q was update the market actually quite a bit on downstream and the progress we're making in the downstream. It is, again, a core part of BP's DNA. It's been a big focus inside the company when I talk about delivery around how do we drive performance improvements there. We're always very reflective in BP. I think humility is important. We had a tough year in 2024 in our downstream business. Performance wasn't where we wanted it to be, so it has been a big focus this year across the company. Some, I think, real successes like the upstream this year in the downstream is if you take our refining system, similar to the upstream, running that kit really, really well. Mm-hmm. We had in 3Q almost 97% refining availability across our refining system. Why does that matter? If you're running the refineries well, they're available, they can maximize the opportunity around margin capture. And the team there, credit to them, has done a great job getting that business back to where we want it to be. And that 97% probably for the portfolio today is the best performance in 20 years. So the real focus on running the kit well. I think secondly, what they're also doing, and again in the downstream in particular, are driving costs out. So when you look at where they are on costs, they have now driven out around 50% of their share of the structural cost reductions that they plan to deliver over 3 years. They've done 50% in 9 months year to date. So more to come, but they're really driving momentum in taking cost out and driving efficiency across that business. And then I think a few highlights in what we call our customers business, in particular on Castrol. Castrol is a business that has now had 9 quarters of sequential performance improvement. So 9 really strong quarters driving performance improvement. The team there are doing a great job. I'd also recognize Castrol is a business that we have called out as under strategic review. Why? Principally because that is one of the big parts of our business that's just not fully integrated like we have across the rest of our downstream and customers' businesses. So we are looking at models there for how we might crystallize value. That strategic review is ongoing. We're talking with a number of counterparts and have been extensive interest. Really confident about the progress we're making there. But meantime, the business is performing really well and we have a strong view of the value, and that is what we will be focused on. How do we maximize value through that strategic review for Castrol? So again, great progress across the downstream, both in terms of how they're running the businesses, but the reliability, the cost out, and what they're doing to make sure that kit runs well so we can capture that margin environment.
How are you leveraging technology and particularly AI in your business, and how do you feel that differentiates yourself from your peer group?
Yeah, again, if your clients have listened to the 3Q results, you'll have heard a very energized CEO in Murray talking about this. It is a big focus for BP in terms of the opportunity, not just around AI, artificial intelligence, but also more broadly what we're doing in technology. We've got a fantastic EVP in Emeka Omembolu who's been really driving a step change and focus about how we apply technology. So it's a big area. There's probably four things to this space that we focus on. It starts with partnering, because I think what we do realize is as much as we are using and leveraging technology and AI inside the company, you can learn a heck of a lot from partners you work with. So we're working with companies like Palantir, Databricks, Anthropic, SAP, and leveraging how we actually use their skill sets and actually apply it across the business in terms of application of technology. So partnerships are core, and we've got some very deep areas of partnering there. I think the second thing is on seismic, and I just talked about exploration success, and I talked about the 12 discoveries we've had. A big part of that reason, as much as luck plays into it, inevitably as an explorer, we believe that what's enabled that this year has been a distinctive step change in how we've invested in seismic. And what do we mean by that? Part of it starts with acquisition. So we work with third parties to acquire it. What we then do, really importantly, which is the sort of magic sauce, is we take that seismic data and then we put it into a computing system. What we have done working with NVIDIA is we've invested into a fourfold increase in our supercomputing capacity. So if you get the latest chips from NVIDIA, you can actually grow the capacity. And why does that matter? It allows you to process faster. And ultimately, it's a speed game. So what we're trying to do is take that capacity and apply it to increase the processing of the data. Where we are today is we've increased our processing speed by 10 times as a result of that investment into our high-performance computing center, which is in Houston. And some of the steps that come out of that processing are now running 50 times faster in terms of the actual process that we go through. So that is an important part of it. Invest in the capacity, process faster. But then what we also do is you want to take that data and do something unique with it. And that's the algorithmic piece. And what we have done over the past several years is invested in bringing real world-class capability, often out of Silicon Valley, inside BP to sit inside the company. So we've got a real focus on seismic through investment in the upfront kit, through actually how we process, and then how we interpret through algorithms. And we think that's created a very distinctive ability to now take that seismic and interpret the opportunity. It allows us to understand then when the drillers come in, where do we want to sort of drill, penetrate the reservoir to get the optimal insight into what we think is there. So I think that has been a big journey on seismic as well. And then the other area that I think I would call out probably is then how we're actually applying AI, which you talked about. A couple of examples. In our, again, upstream area, one of the things that can destabilize that plant reliability or the reliability of the kick are well kicks. So this is where you have influx into wells. You have a well that has a well event. We've invested extensively into using artificial intelligence to understand where we see well kicks. And what you want to do is see an event and minimize it so that that well isn't destabilized or offline ultimately. And actually through applying artificial intelligence to understanding well kicks across our portfolio, we've now reduced the impact of that well kick by 90%, and actually through the lens of the impact of it. So it's in less than 1 minute impact, and we've improved that by 90%. So it's helping the reliability of the wells staying online. And then the other area I think in the upstream that I would say we're applying artificial intelligence is in well planning. And one area in particular is in Azerbaijan. So what we've done in Azerbaijan is we've invested into, so when you do a well plan, you've got, hundreds of options that you want to how you want to plan a well. Through applying artificial intelligence, we can take those options and synthesize them much quicker to more efficiently be able to design and plan a well, which ultimately allows you to get to the point of when you can actually drill that. And we've significantly increased the efficiency and process around how we plan wells. And it's been very effective in Azerbaijan. And maybe one last one, because there is a lot of passion in BP around AI. We're doing this in retail as well. So we jumped from oil and gas into the actual retail gas stations. And what we're doing there is applying artificial intelligence to understand the SKUs, the product SKUs, and understand demand, how we actually meet supply, and importantly, minimizing waste. So a big part of putting stuff on shelves in gas stations or retail stations is the products you put there. Do they sell? Are they being bought? Do you understand your customer demand? How do you supply most efficiently? And that whole data that we understand across thousands of retail stations, we're applying AI across it to try and minimize waste. Because if you minimize waste, you minimize cost, you maximize revenue and margin. Yeah. So it's across the business. There's a lot more to do. And I think really importantly, back to where I started with our partners, we can do a lot with our partners to continue to enhance it. And ultimately, it gets down into cost. How do we run this business smarter? How do we take that $4 to $5 billion of cost out? It's in oil and gas, as I've explained, but it's also in our customers and products business, and it's helping to drive efficiency.
BP's undergone a number of sort of strategy updates. What makes you convinced that you got it right this time? And what differentiates yourselves from the other majors?
I come back to that sort of humility point. I recognize the company's been through quite a bit of change over the past 5 years. I think the world's been through a lot of change over the past 5 years. I think we've seen the impacts of COVID. We've seen the impacts and uncertainty geopolitically around the world and the impact it can have on the economy. And it's certainly the impact it has on the sort of energy sector, either through pace of adoption of energy transition or how countries are reacting to security of supply and the impact it means on those countries and to the people who consume energy. I think with that said, one of the things we've recognized earlier this year is I mentioned at the start, Neil, the strategy is right. We do believe in that. We've got conviction in the strategy. And importantly, we believe we're heading in the right direction. We obviously have a management team that I think is building real strong credibility and driving momentum in the delivery of that. This is about delivery of that strategy now. It's about what we can do to accelerate it, what we can do to drive the delivery of those 4 very clear but very important targets by the end of 2027. I think I mentioned to you, I don't foresee, and neither do I expect, a big reveal of anything new. We've got the right direction. We want to drive forward. What makes us, I think, distinctive in that context then, I think are 4 things. So number 1, a set of world-class assets and deep capability inside the company. That DNA inside the company and the asset base we have, I think, is really distinctive. And I think, as I said already, we're running those assets well. The people are running those assets well. We're doing what I call the basics really well. Keep the plant reliable, keep the hydrocarbons inside the plant so it's delivered to the end market, keep people safe. And those statistics of operating reliability and plant availability are absolutely key. We just got to keep doing that and driving those world-class assets and that capability to the best it can be. That's number 1, and I think we're building a good track record there. I think secondly, we've got a deep resource base now. We always have had a strong resource base. We've got 20 years of reserve life in terms of the oil and gas business, and we've just added 12 discoveries into that portfolio. Yes, we need to go and appraise those discoveries. Yes, we need to understand the potential. You've heard about our excitement around Bumerangue, but that's an unprecedented add to that set of options that we have. What we're now doing through that portfolio review is we're taking the totality of that resource base and saying, where do we want to invest that scarce capital? Where's the best place to put that dollar to maximize the return, to maximize the cash flow, and to ultimately grow value for our shareholders? So that's the portfolio review. It's coming from a position of strength and a real position of optionality to drive forward and make BP and that future of BP even stronger than where we are. The third thing I think is in cost and efficiency. I've talked about it. We've got a key target to drive $4 to $5 billion out of structural cost reductions. There's more to do in that space. We fundamentally believe. You'll have heard our CFO possibly talking about that. We're going to get some benchmark data through over the next couple of months. That benchmark data is intended to see what we can do to take what we believe that $4 to $5 billion does, gets us to top quartile. What does that benchmarking data now enable us to do to move to best in class? And what is the opportunity to potentially drive faster, drive further, and do more? So I think that cost and efficiency piece is very distinctive. We believe that actually that's about a 20-25% reduction in our structural costs, which we think is pretty distinctive across our peers when you look at the quantum and scale of costs we're taking out. but we've got more to do, and we're going to drive that down to the bottom line. That's a big point. And I think lastly, this all comes together in terms of growing free cash flow. As I mentioned already, that's a 20% compound annual growth rate over the next 3 years. We think that's pretty distinctive. We're focused on growing returns as well to greater than 16% over the next 3 years. And that really supports a growing dividend. We've said we have an expectation to grow that dividend by at least 4% per year. You'll have seen that update in the second quarter of this year. And then lastly, as I started, it's about strengthening that balance sheet, a really important key target for us to deliver. So growing free cash flow, growing returns, delivering that dividend growth, and strengthening our balance sheet. You drive growth in free cash flow, you drive growth in returns. Our shareholders experience that. And I would hope what we can do through continuing to prove delivery, to build that momentum, to build that credibility, that we can build that confidence in the investment case. And I would say, so far, we've got another quarter to deliver, but 2025 has been a great step on that journey.
Craig, normally I would want to sort of summarize what I've heard, but I think you've done that beautifully, the 4 points that you brought up. What comes across is that you're very clear about your strategy, you're focusing on the basics, you're ambitious, and there's more to do. We're looking forward to staying in touch, and we'll look forward to tracking your progress. Thank you very much for being on Edison TV.
Thank you, Neil. It's been a pleasure. Thank you.